Welcome to the Huddle Boomer podcast. Let me ask you something. What do you believe about money? Not what have you been told, or what do you actually believe? Why do you pay taxes? Is it to fund wars? Is it to pay for all the roads and streets? How did you come to believe all this? Here's the paradox. We have too much information, not enough truth. Today, we're digging into history, continuing to dig into history that people don't really know about. There have been 4 central banks in the United States, 0 accountability, and a pattern that just keeps on repeating. This is the Huddle Boomer podcast, where we break the truth apart, give it to you simply, and give you something to think about. Now, just a word, this is not financial advice. This is our opinion and our observations. Before we continue, let me just quickly mention our sponsor, hodlandtees.org, where you can put in a code, get 10% off of any merch on the store. That's called Welcome10. Just put that in and immediately take 10%. So, let's jump in. We're wrapping up The Creature from Jekyll Island over the next 2 episodes. Today we're going to be going through sections 4 and 5. A Tale of Three Banks is section 4, and section 5 is The Harvest. Now, this has been a little bit different. We're actually reading the summaries of every single chapter, just as G. Edward Griffin recommended in this seminal work. The principle I'd like for you to remember is this. If we don't learn the lessons of history, we're bound to repeat them. This isn't conspiracy. It's documented history. The things I'm going to share with you, if you're not familiar with them, they'll probably set a little panic in, because you're going to realize you have not been in control at all of the money. But you're here to learn, not to panic. And Bitcoin is great hope that's working very, very well. So, in this chapter, why this episode matters. I've already alluded to it. You can't fix what you don't understand. The media, the markets, and the politicians, they all control the narrative. You and I have to look at the facts and then decide for ourselves what the truth is. So today's goal is understanding the pattern, understanding the 4 attempts at central banking in America before 1913. Recall quickly, sound money is honest money. Fiat money is control. We're going to jump in now to the section of 3 banks. The first chapter is chapter 15. It's called The Lost Treasure Map. It's called The Lost Treasure Map because the Founding Fathers prohibited fiat money. At the founding, they had bad experiences before ratification, and they actually came up with a solid way to back the money. The constitutional standard was 371.25 grains of pure silver per dollar. Silver was the treasure map to sound money, but we abandoned it. The blueprint was there, but we walked away. Instead, we got what's now known as fiat money. In plain English, the government says it's money, but there's nothing backing it. In chapter 16, we'll go a little bit further, but let's begin with reading the summary of chapter 15. America had its first central bank even before the Constitution was drafted. It was called the Bank of North America and was chartered by the Continental Congress in 1781. Modeled after the Bank of England, it was authorized to issue more paper promissory notes than it held in deposits. In the beginning, these notes were widely circulated and served as national currency. Although the bank was essentially a private institution, it was designed for the purpose of creating money to lend to the federal government, which it did from the start. The Bank of North America was riddled with fraud, and it quickly fell into political disfavor. Its inflated banknotes eventually were rejected by ordinary citizens and ceased to circulate outside of the bank's home city of Philadelphia. Its charter was allowed to expire, and then in 1783, it was converted into a purely commercial bank chartered by the state of Pennsylvania. The advocates of fiat money did not give up. In 1791, the first Bank of the United States, which was America's second central bank, was created by Congress. The new bank was a replica of the first, including the fraud. Private investors in the bank were among the nation's most wealthy and influential citizens, including some congressmen and senators. But the largest investment and the most powerful influence in the bank came from the Rothschilds in Europe. The bank set about immediately to serve its function of creating money for the government. This led to massive inflation of the money supply and rising prices. In the first 5 years, 42% of everything people had saved in the form of money was confiscated through the hidden tax called inflation. This same phenomenon had plagued the colonies less than 2 decades earlier. But instead of being caused by printing press money, it was now fueled by fractional reserve banknotes created at a central bank. As the time for renewal of the bank's charter approached, two groups with opposite intentions became strange political allies against it. The Jeffersonians, who wanted sound money, and the frontier banks, called wildcatters, who wanted unlimited license to steal. On January 24, 1811, the charter was defeated by 1 vote in the Senate and 1 in the House. The central bank was gone, but wildcatters were everywhere. The War of 1812 was not popular among the American public, and funding would have been impossible through taxes alone. The government chose to fund the war by encouraging wildcat banks to purchase its war debt bonds and convert them into bank notes, which the government then used to purchase war material. Within 2 years, the nation's money supply had tripled, and so had prices. Once again, the monetary and political scientists had succeeded in fleecing the American public of approximately 66% of all the money they held during that period. And that was on top of the 42% fleecing they got a few years earlier by the Bank of the United States. Folks, we think this is new. We think, oh, the banks have just become corrupt. They've gotten too big. They messed up in the 80s. No. These things were established to steal from you ages ago, well before any of us were even born. This is the system that we're in right now. Let's continue on reading the summaries of the chapters in The Creature from Jekyll Island. Chapter 17 is called A Den of Vipers. And basically, it covers the period of time when the first bank failed. There was monetary chaos that followed. The government solution was the second Bank of the United States, new name, new fraud. The boom-bust cycle now went nationwide. It wasn't just regional. President Andrew Jackson fought against it hard, but the head of the bank, Nicholas Biddle, used political maneuvering to resist. Jackson won. The bank charter did expire, and Jackson was said to have said, "I killed the bank." Let's dig in to the summary and actually see what happened. The government had encouraged widespread banking fraud during the War of 1812 as an experiment for paying its bills, and this had left the nation in monetary chaos. At the end of the war, instead of allowing the fraudulent banks to fail and letting the free market heal the damage, Congress decided to protect the banks, to organize the fraud, and to perpetuate the losses. It did this by creating the nation's third central bank, called the Second Bank of the United States. The new bank was almost an exact copy of the previous one. It was authorized to create money for the federal government and to regulate state banks. It influenced larger amounts of capital and was better organized across state lines than the old bank. Its policies had a greater impact on the creation and extinguishing of the nation's money supply. For the first time in history, the effects began to ricochet across the entire country at once instead of being confronted to geographical regions. The age of the boom-bust cycle had arrived at last in America. In 1820, public opinion began to swing back in favor of the sound money principles espoused by the Jeffersonian Republicans. But since the Republican Party had by then abandoned those principles, a new coalition was formed, headed by Martin Van Buren and Andrew Jackson, called the Democratic Party. One of its primary platforms was the abolishment of the bank. After Jackson was elected in 1828, he began in full earnest to bring that about. The head of the bank was a formidable adversary by the name of Nicholas Biddle. Biddle was not only possessed great personal abilities, but many members of Congress were indebted to him for business favors. Consequently, the bank had many political friends. As Jackson's first term of office neared its end, Biddle asked Congress for an early renewal of the bank's charter, hoping that Jackson would not risk controversy in a re-election year. The bill was easily passed, but Jackson accepted the challenge and vetoed the measure. Thus, a battle over the bank's future became the primary presidential campaign issue. Jackson was re-elected by a large margin, and one of his first acts was to remove deposits from the bank and place them into private regional banks. Biddle counteracted by contracting credit and calling in loans. This was calculated to shrink the money supply and trigger a national panic depression, which it did. He publicly blamed the downturn on Jackson's removal of deposits. The plan almost worked. Biddle's political allies succeeded in having Jackson officially censored in the Senate. However, when the truth about Biddle's strategy finally leaked out, it backfired against him. He was called before a special congressional investigative committee to explain his actions. The censure against Jackson was rescinded, and the nation's third central bank passed into oblivion. A little bit confusing. Here's the sum of it. There was a battle, and the Jackson people wanted to ensure that honest money came back into the system. This Biddle character was against that, and he fought hard against it, called in favors and did all kinds of backhanded stuff to try to unseat what Jackson wanted to do. So they did censure Jackson, but the people found out about it, and the third central bank passed into oblivion. It went away. So there's this pitched battle between the people who began to kind of understand what was going on with the banks and the politicians who have forever, since the first central bank came about, were trying to get this fractional reserve fiat banking in place. Kind of confusing, but that's the simple of it. Chapter 18, continuing on the same theme, is called Loaves and Fishes and Civil War. The second bank by this time was gone, but fractional reserve bank was alive. This was a period called free banking. It was actually anything but free banking. The boom and bust cycle was in full swing. The Civil War wasn't just about slavery. European banking interests were involved. The Rothschild fingerprints, the Rothschild plan was all over this thing. It's really important here to note that the Civil War was certainly fought over slavery, and I don't want to minimize the importance of that. But saying it was just about slavery is just kind of hiding the truth. The truth is that slavery was used as a front-line issue, and in the background, it was a financial study. There was financial implications, European countries involved in our Civil War. So let's read through it with a sober mind and understand that slavery was a huge part of it and part of our national history. But there was, as always, a secondary monetary policy, which the government hid from the people. So, loaves and fishes and the Civil War. The second bank of the United States was dead, but banking was very much alive. Many of the old problems continued and new ones arrived. The issuance of banknotes had been severely limited, but that was largely offset by the increasing use of checkbook money, which had no limits at all on its issue. When the second bank of the U.S. slipped into history, the nation was nearing the end of the boom phase of a boom-bust cycle. When the inevitable contraction of the money supply came, politicians began to offer proposals on how to infuse stability into the banking system. None dealt with the real problem, which was fractional reserve banking itself. They all concentrated instead on proposals on how to make it work. All of these proposals were tried and they failed. These years are sometimes described as a period of free banking, which is an insult to the truth. All that happened was that banks were converted from corporations to private associations, a change in form, not in substance. They continued to be burdened by government controls, regulations, supports, and other blocks against the free market. The economic chaos and conflict of this period was a major cause of the Civil War. Lincoln made it clear during his public speeches that slavery was not the issue. The basic problem was that the North and South were dependent on each other for trade. The industrialized North sold its products to the South, which sold its cotton to the North. The South also had a similar trade with Europe, and that was an annoyance to the North. Europe was selling many products at lower prices, and the North was losing market share. Northern politicians passed protectionist legislation putting import duties on industrial products. This all but stopped the importation of European goods and forced the South to buy from the North at higher prices. Europe retaliated by curtailing the purchase of American cotton. That hurt the South even more, and it was a classic case of legalized plunder, and the South wanted out. Meanwhile, there were powerful forces in Europe that wanted to see America embroiled in civil war. If she could be split into two hostile countries, there would be less obstacle to European expansion of the North American continent. France was eager to capture Mexico and graft it into a new empire, which would include many of the southern states as well. England, on the other hand, had military forces poised upon the Canadian border, ready for action. Political agitators, funded and organized from Europe, were active on both sides of the Mason-Dixon line. The issue of slavery was but a ploy. America had become the target in the ruthless game of economics and politics. I stuttered and stumbled reading that a little bit because I understand the Civil War was about slavery. Good came of the Civil War. We freed the slaves. But just like the government is wont to do, they used a crisis to hide their strategies about financial control. Folks, this malfeasance is not new. Messing with your money is not new. It's been around for a very, very long time, and it continues today. Chapter 19 is called Greenbacks and Other Crimes. The Rothschild formula that we talked about last week is all over this stuff. Greenbacks were issued around this time, but they didn't solve the problem. The stage is being set for total control of the money supply. So let's dig into the summary of the Greenbacks and Other Crimes. I realize this is heavy and I'm not entertaining, and it's probably tough to stick around and fight through this, but I really, really hope that you do, because it's very important to understand the facts, not trying to scare you, not trying to give you an alternative view of the past. This is fully documented. The book is this thick, and I'm reading you the summaries of every chapter like Griffin recommends. It's crazy. It's crazy to think how manipulative our government has been when it comes to money. The moneyed interests, the meeting that happened at the creature from Jekyll Island, which is the beginning point of all of this book, it was really secretive, and people didn't know anything about it. Let me continue and read Greenbacks, and other crimes. It is time now to leave this tragic episode and move along, so let us summarize. America's bloodiest and most devastating war was fought not over the issue of freedom versus slavery, but because of clashing economic interests. At the heart of this conflict were questions of legalized plunder, banking monopolies, and even European territorial expansion into Latin America. The bootprint of the Rothschild formula is unmistakable across the graves of American soldiers on both sides. In the North, neither greenbacks, taxes, nor war bonds were enough to finance the war. So a national banking system was created to convert government bonds into fiat money, and the people lost over half of their monetary assets to the hidden tax of inflation. In the South, the printing presses accomplished the same effect, and the monetary loss was total. The issuance of the Emancipation Proclamation by Lincoln and the naval assistance offered by Tsar Alexander II were largely responsible for keeping England and France from intervening in the war on the side of the Confederacy. Lincoln was assassinated by a member of the Knights of the Golden Circle, a secret society with rumored ties to American politicians and British financiers. Tsar Alexander was assassinated a few years later by a member of the People's Will, a nihilist society created in Russia with rumored ties to financiers in New York City, specifically Jacob Schiff and the firm of Cohn, Loeb and Company. As for the creature of central banking, there had been some victories and some defeats. The Greenbacks had for a while deprived the bankers of their override on a small portion of government debt, but the National Banking Act quickly put a stop to that. Furthermore, by using government bonds as backing for the money supply, it locked the nation into perpetual debt. The foundation was firmly in place, but the ultimate structure still needed to be erected. The monetary system was yet to be concentrated into one central bank mechanism, and the control was yet to be taken away from the politicians and placed into the hands of the bankers themselves. It was time for the creature to visit Congress. So this is obviously history that spans quite a few years, but the string is continual throughout it. 4 iterations of what became the central bank now, and all had the same thread. All had the thread of stealing the money from the American people and hoarding it and using it to apply influence in the world. Bitcoin has the opportunity to displace the functions of the central bank. Now, a lot of you guys are probably looking at this thinking I'm crazy. All I would tell you is to read The Creature from Jekyll Island. It's heavy, but it's very well documented. It's history. We can't repeat this history. Section 5, the next section of the book, is called The Harvest. And it is exactly what you would think. It's the harvest of the product of the central bank. It begins in chapter 20 with the London connection. After the Civil War, the boom and the bust cycles dominated. The House of Morgan rose. The House of Morgan had very strong ties to England. Benjamin Strong, who was a Morgan man, was named the president of the Federal Reserve Bank of New York. To save the Bank of England, Strong created inflation, new types of inflation in the U.S. The outflow of gold as a result of this action led to the crash of 1929, that and monies leaving the U.S. The key point is that the Fed was designed to serve foreign banks, not Americans. Let's read the summary of the London connection, and I think you'll see that we were not on our own. We were participating in a global system of acquiring money and using it to fund wars. You'll remember that we talked about the alchemy of turning gold into lead. In other words, gold funding wars. This is the period of time when it really started to happen. The London Connection. After the Civil War, America experienced a series of expansions and contractions of the money supply, leading directly to the economic booms and busts. This was a result of the creation of fiat money by a banking system which, far from being free and competitive, was a halfway house to central banking. Throughout the chaos, a one-banking firm, the House of Morgan, was able to prosper out of the failure of others. Morgan has close ties with the financial structure and culture of England, and was in fact more British than American. Events suggest the possibility that Morgan and Company was in concealed partnership with the House of Rothschild throughout most of this period. Benjamin Strong was a Morgan man and was appointed as the first governor of the Federal Reserve Bank of New York, which rapidly assumed dominance over the system. Strong immediately entered into a close alliance with Montague Norman, governor of the Bank of England, to save the English economy from depression. This was accomplished by deliberately creating inflation in the U.S., which caused an outflow of gold, a loss of foreign markets, the unemployment and speculation in the stock market, all of which were factors that propelled America into the crash of 1929 and the Great Depression of the 1930s. Although not covered in this chapter, it must be remembered that the same forces were responsible for the American involvement in both wars to provide the economic and military resources England needed to survive. Furthermore, the key players in this action were men who were part of the network, a secret society established by Cecil Rhodes for the expansion of the British Empire. One thing will become clear to you if you choose the challenge to read through The Creature from Jekyll Island and not just listen to these summaries. There is a thread, in fact a very thick thread, that runs all the way through this history. There are connections of people, of principalities like England, of powers that just conspire, and I mean to use the word, to take money away from America and to move it into the mechanics that run the world. I'm going to continue on and stop editorializing. The next chapter, chapter 21, is named Competition is a Sin. It's interesting to consider that most of American culture believes that competition is a good thing. Competition causes prices to drop and for products to get better. Not the case with the banking system, not the case at all. Banking before the Federal Reserve Act was full of rules and controls. Wall Street wanted more government participation. They wanted to make sure that there was a lender of last resort. This was Wall Street, and the government wanted a lender of last resort to ensure that the money supply would always continue. Trusts and cartels were already in place, and when they came up with this system, they knew they had to avoid the label central bank. Senator Aldrich, who you'll remember was a key player in The Creature from Jekyll Island, he had chosen to bring the bill forward, but it failed. He had a bad reputation. Then the bill was basically repackaged, delivered under an anti-Wall Street senator. It was deception at its core. Same bill, different delivery person, different label. And it succeeded, as we'll see. Here's the summary of Competition is a Sin. Banking in the period immediately prior to the passage of the Federal Reserve Act was subject to a myriad of controls, regulations, subsidies, and privileges at both the federal and state levels. Popular history portrays this period, as one of unbridled competition and free banking. It was, in fact, a halfway house to central banking. Wall Street, however, wanted more government participation. The New York bankers particularly wanted a lender of last resort to create unlimited amounts of fiat money for their use in the event they were exposed to bank runs or currency drains. They also wanted to force all banks to follow the same inadequate reserve policies so that more cautious ones would not draw down the reserves of others. An additional objective was to limit the growth of the new banks in the South and West. This was a time of growing enchantment with the idea of trusts and cartels. For those who had already made it to the top, competition was considered chaotic and wasteful. Wall Street was snowballing into two major banking groups, the Morgans and the Rockefellers, and even they had largely ceased competing with each other in favor of a cooperative financial structure. But to keep these cartel combines from flying apart, a means of discipline was needed to force the participants to abide by the agreements. That federal government was brought in as a partner to serve that function. To sell the plan to Congress, the cartel reality had to be hidden, and the name central bank had to be avoided. The word federal was chosen to make it sound like it was a government operation. The word reserve was chosen to make it appear financially sound. And the word system, in the first drafts it was called association, was chosen to conceal the fact that it was a central bank. A structure of 12 regional institutions was conceived as a further ploy to create the illusion of decentralization, but the mechanism was designed from the beginning to operate as a central bank closely modeled after the Bank of England. The first draft of the Federal Reserve Act was called the Aldrich Bill and was co-sponsored by Congressman Vreeland, but was not the work of either of these two politicians. It was the brainchild of banker Paul Warburg and was actually written by bankers Frank Vanderlip and Benjamin Strong. Aldrich's name was attached to the banking bill, but it was a bad strategy because he was known as a Wall Street senator. His bill was not politically acceptable and was never released from committee. The groundwork had been done, however, and the time had arrived to change labels and political parties. The measure would now undergo minor cosmetic surgery and reappear under the sponsorship of a politician whose name would be associated in the public mind with anti-Wall Street sentiments. Manipulation. More manipulation, more obfuscation to keep what was going on from the eyes of the public, even insofar as the name. So the central bank was about to be launched. And in chapter 22, The Creature Swallows Congress, it's about how it sort of became the behemoth that it is now. And in essence, what happened was President Taft didn't play ball. So he was replaced by President Woodrow Wilson. The Aldrich Bill was being polished behind the scenes, and the money men publicly denounced the money trust while they were backing it at the same time. On December 23rd of 1913, the Federal Reserve Act passed. Deception and coercion were in the middle of its passage. The third central bank of the United States by name became the fourth central bank, actually, and it's still here. Let's read the summary of The Creature Swallows Congress. President Taft, although a Republican spokesman for big business, refused to champion the Aldrich Bill for a central bank. This marked him for political extinction. The money trust wanted a president who would aggressively promote the bill, and the man selected was Woodrow Wilson, who had already publicly declared his allegiance. Wilson's nomination at the Democratic National Convention was secured by Colonel House, a close associate of Morgan and Warburg. To make sure that Taft did not win his bid for re-election, the money trust encouraged the former Republican president, Teddy Roosevelt, to run on the progressive ticket. The result, as planned, was that Roosevelt pulled away Republican support from Taft, and Wilson won the election with less than a majority vote. Wilson and Roosevelt campaigned vigorously against the evils of the money trust, while all along being dependent upon the same trust for campaign funding. When Wilson was elected, Colonel House literally moved into the White House and became the unseen President of the United States. Under his guidance, the Aldrich Bill was given cosmetic surgery and emerged as the Glass-Owen Bill. Although sponsored by Democrats, in all the essential features, it was still the Jekyll Island plan. Aldrich, Vanderlip, and others, identified with Wall Street, put on a pretense of opposing the Glass-Owen Bill to convince Congress and the public that big bankers were fearful of it. The final bill was written with many sound features, which included to make it palatable during congressional debate, but which were pre-designed to be dropped into later years. To win the support of the populace under the leadership of William Jennings Bryan, the Jekyll Island team also engineered what appeared to be compromises, but were in actual operation, as Wilson called them, mere shadows, while the substance remained. In short, Congress was outflanked, outfoxed, and outclassed by a deceptive but brilliant psychopolitical attack. The result is that on December 23, 1913, America once again had a central bank. And it's still here. It is still here. Chapter 23 discusses the Great Duck Dinner. And it's really about how Federal Reserve policies led to the crash of 1929. Congress had been assured that the Federal Reserve would be decentralizing banking power away from Wall Street. However, within a few years of its inception, the system was controlled by the New York Reserve Bank under the leadership of Benjamin Strong, whose name was synonymous with Wall Street Money Trust. During the 9 years before the crash of 1929, the Federal Reserve was responsible for a massive expansion of the money supply. A primary motive was that policy was to assist the government of Great Britain to pay for its socialist programs, which by then had drained its treasury. By devaluing the dollar and depressing interest rates in America, investors would move their money to England, where rates and values were higher. That strategy succeeded in helping Great Britain for a while, but it set in motion the forces that made the stock market crash inevitable. The money supply expanded throughout this period, but the trend was interspersed with short spasms of contraction, which were the result of attempts to halt the expansions. Each resolve to use restraint was broken by the higher political agenda of helping the governments of Europe. In the long view, the result of plentiful money and easy credit was a wave of speculation in the stock market and urban real estate that intensified with each passing month. There is circumstantial evidence that the Bank of England and the Federal Reserve had concluded in a secret meeting in February of 1929 that a collapse in the market was inevitable and that the best action was to let nature take its course. Immediately after that meeting, the financiers set advisory warnings to lists of preferred customers, wealthy industrialists, prominent politicians, and high officials in foreign governments to get out of the stock market. Meanwhile, the American people were being assured that the economy was in a sound condition. On August 9th, the Federal Reserve had applied to pin the bubble. It increased the bank loan rate and began to sell securities in the open market. Both actions have had the effect of reducing the money supply. Rates on brokers' loans jumped to 20%. On October 29, the stock market collapsed. Thousands of investors were wiped out in a single day. The insiders, who were forewarned, had converted their stocks into cash while prices were still high. They now became the buyers. Some of the greatest fortunes in America were made in that fashion. Do you notice something? We've talked about it. It's that the people closest to the money printer, the people that know what's going on, they get wealthy, while the rest of us suffer. Folks, it's impossible to succeed at the level of the people that are closest to the money printer. The system is rigged. The system chooses winners and losers. And most of us are losers. We don't know we're losers because we live in our McMansions. We're allowed to save up some money, but we don't see what's happening to the money really. We're accepting, for example, a target 2% inflation. That's only 2%. I'll earn faster than that. But the totally burdened call on your money indicates that you can't get ahead because the hurdle rate is actually a lot higher than 2%. Your money is worth less than it was. There needs to be a new system. The Federal Reserve System is badly broken. And we'll dig into, in the final episode covering the creature from Jekyll Island, we'll dig into 2 versions of the future, and then we'll call it good. I hope this has been instructive to you. I hope this light treating of the creature from Jekyll Island inspires you to read the thing, because it doesn't even talk about Bitcoin. It talks about solving the problem and what history has said about the creation of the central bank. We love you. We'll remind you, please, to go to hodlandtees.org, stay humble, stack sats, and look to God for the truth and guidance. Take care.